Okay, guys, so I'm gonna give you the update of this coming week or the things that I see unfolding on gold. Following the fact that the Fed are not cutting the rate, they just pause the cut, and what we are looking forward into, they are going for a hawkish move. So if the Feds are hawkish, they are looking to strengthen the dollar because of the inflation, because this is the all-time high of their inflation. Okay, their inflation is too high, so they are gonna be looking to strengthen uh, or to boost the strength of the dollar because of inflation that they have. Okay, so they are not gonna go dovish, they are hawkish, which means that they will continue hiking the rates. Okay, we're looking at 3.5 to 3.75 of the rates, in which in their next meeting, if they are gonna be hiking their rates, we are gonna be looking at 4.0. Okay, or 4.25. Okay, that's what we are gonna be looking into when we are looking at the rates. Okay, which remain hawkish. So monthly, we can see how gold has been trading. Okay, like ever since we managed to break above 3,500, which was this price above here, we've seen how gold has been bullish. Okay, it continued being bullish without retracing. Okay, in which now we are seeing this deep retracement, which now when we look at this area here, okay, this is the only candlestick which started the range uh, of the bearish or the consolidation wave. Okay, so we are gonna have like a line below there. So what we are gonna do before we continue, let me mark the high and then also the start of the range. Okay, which is just gonna be there. Okay, so what we're gonna do here to make it less complicated, we're gonna measure this impulsive wave here. Okay, we're gonna put our Fibonacci there and all the way to the high. Perfect. So we can see where the market is now. We are looking at the 61.8% of the Fibonacci retracement, and then lower there we have the 71 to 79% of the Fibonacci retracement. Okay, but as we are now, I'm only gonna be watching the 61.8% of the Fibonacci retracement and also the sweep of the range, which means that I'm only gonna be focusing right on these prices here. Okay, and then we'll adjust this when we go to a weekly time frame. So we can see that the market is holding there on a monthly time frame, but let's go on a weekly time frame. Okay, here we are on a weekly time frame, and there are certain things that I'm still seeing here. Okay, we are bearish from up here going down there, or we have been bearish from up there going down there. Okay, let's just make sure that we cater for perfect touches. I'm gonna clone the same line there and then drag it lower. Okay, okay, you know what, I'm gonna draw these trends here on a daily time frame. I think here they won't be as clean as I want them to be. I don't want to be adjusting them there. So let's look at this 61% of our Fibonacci retracement here. This is where we tapped, and we can see that on the previous week we had a bit of a rejection after a sweep. We closed back inside. Okay, only to find ourselves opening up and then going up to reject and then come back down. So we do have a strong zone right above here. Okay, which is this area here. Okay, so if we look at this area here, it was once a high that we broke and come and retest to before we continue up again. So that's what we are gonna be on a lookout for. That's where we tapped before we reject and come back down on the weekly time frame. So let's go daily. We'll see what happened. Okay, so like I said, we came down, we sweep this low, and then we rejected only to push back up. Okay, we rejected just to push back up, So where I want this is right on this line, exactly on the line. Perfect. So now this is what we are gonna be watching. Okay, so on the daily we can see that we are trading below our 200 moving average, which means that we are still gonna remain bearish. Okay, and like I was saying about the trend being downtrend, if we are looking it from that state there, let's go ahead and clone it and drag it below. Okay, so just like that, guys, we can all tell now that we've been trading inside this range now, or this is our consolidation range that we've been stuck into this downtrending move here. Okay, so we are stuck inside here. We have made a move down to come to the 61.8% of the Fibonacci, and I love how we tapped this zone and rejected Friday before closing. Okay, it was a nice tap. Okay, following the a statement that Trump released, that there won't be anything happening on the street this weekend. It's all nice and good to know that there's still a possibility of us opening and then coming to tap up here before we continue down again. Okay, I feel like this week there's a chance that we might come to this area up here. Okay, we might trade all the way up to this area here before we continue down. Okay, but if we do manage to break above, then we can see a shift which I'm not intending to see as for now, and I will tell you the reasons why might not be looking for any early shift on gold momentum as we are moving down now. Throughout this market structure and the things that I'm seeing now, there's a high possibility of us coming to test down on 3,500 before we start going back up. Okay, this is what I'm seeing now, because if this structure is gonna play out, then we're gonna need one and then two and then the third touch, which might be down here. Okay, before we can start going up there, because also on the upside we have 1 2, and then we're gonna get the third touch on there, and then we break and continue. Those are the things that I believe that we are on the lookout for as we are now. But let's go down on the 4 hours. So our 4 hours time frame, you can see what I've been saying. The moment we came and tapped this area here, or this price here, you can see this mitigation here, we rejected, and then we can see how we couldn't sweep below there. So there's a high possibility of us opening with another gap above, a small retracement to close it early, and then we continue trading to this area here. And this is where I'm suggesting that we might see another strong drop from, and then we continue down from that area there. We can also see how the 4 hour 200 moving average is approaching that area, which is gonna make it the zone where we are gonna drop from if we are gonna be trading going up to that zone. Okay, so the 3 hours also is looking good when we're looking at the price action here, how the market formed, and also the fact that we had this market imbalance here. Okay, we have this FEG which we tapped on, and then we can see how the market responded after tapping on that FEG there. Okay, so those are one of the reasons why I'm saying that there's a high chance of us shifting back up there before we start going down. Okay, so we can see that we had an FEG on all these time frames going down. Okay, but the one that I'm gonna be focused on is the one on the 1 hour time frame. Okay, and then this is where I'm gonna really highlight it and show you what happened exactly. Okay, we can all see that this turned into a point of interest, and we have been looking at this as a point of interest before we opened with a gap above here. We were looking at this zone that the market should come and retest on this zone. If you go back to our previous videos, before the market opened with a gap above here, we were looking at this line or this zone above here, that there's a high chance that we open with a gap above, and then we come and retest this area here, where we were just expecting a small gap above here, and then we continue buying to come and test here. which is what we ended up seeing when we go for a sweep to 43.75, and then we ended up dropping during the Fed meeting, okay, where we saw that Kevin Wash was telling us that he's gonna pause the rate to strengthen the dollar, and then he's looking at a hawkish direction when we are looking at the interest rate, okay. Now the thing that we are gonna be on a watch out for this week, if we do open with a gap above, okay, this is gonna be the zone that we're gonna be watching. Let's remove this zone here so that we have a clean chart. So this is the area that we are gonna be on a lookout for here, guys, okay. We are gonna be on a lookout for this area here. Anything which is gonna be happening on this area here, this is currently our resistance now here. So breaking this and flipping it is gonna turn it into a support, and it's gonna make us target that high there, and that's where we can start dropping, okay. Once those things are gonna be happening, or while those things are gonna be happening, we are gonna be seeing a bit of a drop or a consolidation on the dollar index and the yields. They are not gonna be dropping, they are just gonna be consolidating. So we are gonna focus on buying the gold during those times. But when those things start shifting back up, we are gonna focus on selling gold at those time, okay. We can see we have a good imbalance here which was mitigated. So what we are gonna be on a watch out for is if we open with a gap above, there's a dip that we are gonna be expecting, which might come and close the gap, okay. Then the moment we break back above this area, that's when we are gonna be looking for what? For our market structure shift to the upside, okay. That's what we are gonna be targeting, and then this is the area that we are gonna be trading, targeting just 4,440, okay. That's what we are gonna be trading, targeting to the upside, okay. So what we want is to see if the market is gonna open with a gap above. If the market doesn't open with a gap above, then we are gonna turn this FVG here to an IFV, which is an inverse fair value gap, okay, which means that what's gonna happen is that we're gonna open with a gap below. So if we get below, then we are gonna be expecting a retest on it, on this FVG, which is gonna be an inverse FVG after that, and then we're gonna expect the drops to start happening there, which means that we are just gonna get off bearish off there, and then continue selling all the way down to 3,500 as the target, okay. So any sales that are gonna come from this area here or all the way up here, I suggest that we try to push with them until we get to 3,500, because if we are gonna reject and start selling again, that's the next zone that we are gonna be targeting, 3,500, okay. Although we see that there are a lot of things which are starting to shift when we read the policy of the central banks about them continuing buying gold, okay. They are continuing buying gold and reserving gold, which can also signal the fact that soon, okay, we just need to have like few push to the downside to complete this consolidation, and then soon, even if the dollar is gonna be the dollar is still gonna be bullish, we can see gold shifting again due to the fact that if the central banks are buying gold as a reserve, it means that we are gonna see the value of gold changing, and then we're gonna see the gold price going up again, okay. But you must know that when the dollar goes up, or when the dollar strengthens, the reason why gold drops is because demand goes down, because gold becomes more expensive for other countries to afford. You understand? It doesn't mean that when the dollar is going up and then the price of gold is dropping down, the fact that the price of gold is dropping down is because there is less demand, okay. Because if the dollar is high, because the value of gold is measured in dollars, so when the dollar strengthens, gold becomes expensive for other countries to be able to buy. So it's not easy for other countries to be buying gold, okay. So that's what we are gonna be on a lookout for going forward to this week. So what we do want to be seeing here is a gap up. If we gap up, then we are gonna be going for this scenario here, but if we are gonna get below, then we're gonna go for this scenario here. So these are the things that we are gonna be on the lookout for going to this coming week. Okay, we are gonna be looking into this scenario here. I'll see you on another video, guys. Yeah, we'll get to talk on another video, but this is all that we are gonna be focusing on going to this coming week when we are looking at gold. Okay, we'll make sure that I update the COT data on the website so that you will be able to follow that as well to see what the non-commercials are doing when it comes to gold. Are they placing more buys or closing more buys on gold? Are they placing more buys on the dollar index and the yields? Because what I've been seeing on them now is that they are placing more buys on the dollar index and also on the yields, which means that we are just gonna expect to see a small drop and then a continue on those instruments that I just mentioned. If you can't wait for my updated COT data on my website, you can also visit the insiderweek.com, insiderweek dash it's insider-week.com. Okay, then you can go and get your COT data there and look at the COT data there to see if we are getting an early shift or we're just gonna continue bearish on the on our gold and then bullish on our dollar index. That's the update that I have for you guys going to this coming week. If you have any questions, you're gonna drop them and then I will answer them. Okay.